please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome to the CNBC TV 18 special. I'm Shereen Bhan and we have the pleasure of having Mr. KV Kamath join us. It's been a while, sir. Thanks very much for joining us here on CNBC TV 18 and welcome to India. Let me start by asking you, sir, about the latest as far as the new development bank is concerned. The last review that I saw that you had presented, you had talked about being on track in terms of your lending strategy of about $32 billion by 2021. But what's the outlook like as far as 2018 specifically is concerned?
Yeah, I think for 2018 we are planning to approve loans of around $4.5 billion. I think that puts us firmly in the target range that we want to do. And we expect that we will scale it up by about 25% annually for the next few years till we hit the target we have. Capital has been coming on schedule. We should by January of the coming year hit about $5 billion in capital.
Okay.
In another 3 years we will hit.
So no concerns on that, because there were some concerns that are being raised as far as the capital is concerned? Not
at all. Actually, many of our members have brought in capital ahead of schedule.
Okay.
So that is not a concern. At least in our minds it wasn't, and it has proven to be not a concern. As I said last time, we had raised renminbi funding in the local market. Continues to be a very interesting play, because renminbi affords itself to be swapped into dollar at substantially low cost, lower than what you would do if you were to access the dollar market for a borrowing. So very interesting options there. Hopefully this year we will hit India. We should.
What's the hold up there, sir? Because
no, we were. It's very simple. We need to get our rating exercise done.
Okay.
That is now scheduled for between this month and next month. So hopefully in the next 8 to 12 weeks we should have a rating, and then I think accessing the masala bond market becomes a possibility. We want to see whether there is something that we can do out of Gift City.
Okay.
So if we were to do a masala bond issue, should we not look at options that Gift City would provide us, so on an offshore basis? So some interesting work that my colleagues will need.
By when do you believe that you will be able to take a decision on this front, and what could be the quantum?
This would be the third quarter. Honestly, we would first test the water with a reasonably appropriate issue. I would think about 200 million would be US dollars would be right for us to test, make sure that things work, systems work, and so on. Third quarter should be a timeline that we can aim at.
Okay. Let me also then ask you about lending to projects specifically in India, both from a government perspective as well as from a PPP perspective. The first one, of course, was the Madhya Pradesh roads project that the NDB has gotten involved with. Can you give us an update on what we should now expect in 2018?
See, you're right. We have done projects in Madhya Pradesh covering water, covering roads. We have done canal relining project in Rajasthan. That is the main canal that flows through the state. We have done again on a shelf projects covering roads, mostly rural, water, and a couple of metros in Mumbai and in Indore. That's the current slate.
So what would be the total quantum?
Our appetite for this year and next, if I look at 2 years, will be broadly in the range of 2.5 to 3 billion.
Okay.
And we should definitely do half of that this year, and be on, I would say, scheduled to do things next year. What we have, in a way, now determined for ourselves is we can move at speed. That was something that I had said I aspire to do, but we can now say that we do that. We can do a project in maybe 3 to 6 months by streamlining the processes, by following domestic rules and regulations for, say, environment, procurement, and social and other aspects. That makes things much simpler and easier to implement, and all those have gotten streamlined.
What about the NIIF as well, sir? Because the last time that we spoke with you, you said that active conversations were on with the government on that front. Yeah. Where do things stand?
On the PPP front, because that will cover the whole, we are just now getting ready to get into non-guaranteed private sector type or any other structured type of lending or proposal. I would think that virtually by our next board meeting we should have the first few proposals coming up. So by June we should be ready to get on that. What route it will take in India, we will need to talk to the government, because if the government feels that there is strong demand from states for what I would call quick appraisal and quick disbursement, also preface that I'm very bullish on all our member countries because things seem to be turning for the good. Talking of India, the recent numbers clearly indicate that growth momentum is coming back, particularly on the industry front. Now, if I were to break down, where will growth happen in India, I see clearly three areas. This time round, the prime driver of growth is going to be infrastructure, and that infrastructure driven by government's efforts in various areas. And I think that that is to be commended. What in an economic context, in an infrastructure context, what the government has done. On the back of that, I think employment generation will pick up. And you are already seeing consumption, as you rightly said, as a key driver. I will only expect it to accelerate even more. Because what is now going to happen is the industrial cycle will get a boost because of the spending from infrastructure sector which is going into consumer hands, their incomes going up, and then the next engine or the next cylinder of the engine, which is manufacturing, actually starting to tick at full speed, as it were, or full nick, as it were. I would expect that to happen in the 6 month period.
What's the number that you're working with, sir, in terms of growth? I
would think that initially let us look at 0.5% increments. I would like the number to solidly be at around 7.5%, and then it's going to be very interesting whether it's going to be 0.5% increments or 1% increments. Because at 7.5%, I think you have the momentum to move up from 0.5% increments to 3/4 to 1% increments, and because there will be several drivers of growth, not just 2 cylinders or 3 cylinders or one cylinder, struggling to provide momentum.
Let me speak to you about each of these cylinders of growth, and let me start by asking you about the concern that you might have perhaps on the cost of capital. And I'm not just talking about India, but globally as well. We're now seeing most central banks move away from an accommodative monetary policy to actually tightening interest rates, specifically the US Fed. What's your outlook as far as cost of capital is concerned?
See, again, the countries that you mentioned are on a different cycle, and their interest rates certainly will go up. As far as a country like India is concerned, I would think that you need the interest rates to be salutary to really go to growth rates which exceed that 7.5%, I would say, base that I am looking at. And you probably need to look at decline in interest rates
but is
go to the next term.
But is it a possibility, given where we are today, sir, and given where the bond yields seem to suggest we could be headed?
Shereen, I am a simpleton, and I will look at it very simply. Why should interest rates be where they are in India? What is that fear that is driving us to
inflation?
Signal? But that there is now enough literature that, not me, again, I will not delve into this, that enough economists have done to indicate the lag between these two rates. I think that we now need to try a different prescription or try a different
because
medicine.
The current debate is not on whether the Reserve Bank has the ability to cut. The current debate is whether we're in for a protracted pause, or in fact, if inflation starts to move up and there are signs of structural tightening as far as inflation is concerned, the possibility of a hike. You're saying that there is room for a cut.
Just look at it this way. I think something has gone askew here. All through, when I have looked at the Indian situation, a signal in terms of rates by the monetary policy authorities, then is a signal for bond rates to move in tandem. That's not happening just now. And to me, that raises a bigger flag, which authorities need to look into as to why is this so, and how do you then bring this into I would say, balance, as it were. So otherwise we have a situation where even if somebody were to tighten the policy rates, the bond rates will behave in a manner which is completely distinctly different. So I would think that India is getting into a very interesting situation in terms of how interest rates will need to be looked at going forward. What are the triggers which will move interest rates in which direction? I think has to be relooked at least in my experience on the Indian side, this is for the first time that this is happening. So I think has to be concerted thought on movement of interest rates and how to get them in balance to meet the objective of growth. So far we have said that we are doing certain things to meet the objective of inflation containment. Fine. Are the correlations right? Is it still, what are those things that are driving inflation which need to be corrected by an interest rate hike? I think a lot of tough questions need to be asked as we go forward, because that earlier comfort that, say, an external observer like me would have, that, well, when the policy rate is signaled down, bond rates will come down, suddenly seems to be not working that way.
Okay.
So a whole lot more thought is required on the interest rate front.
Okay, so
that becomes imperative for growth.
For growth.
And without growth, I think this country needs growth.
This country needs growth. Since you're talking about the fact that we need to reimagine the prescription when it comes to interest rates, let me also then ask you a related question, sir, and the need to reimagine the way that we look at public sector banking in this country. And I'm not going to ask you about any specific instance, but there is stress in the banking sector. If you take a look at the NPA picture, 11 out of 21 banks at this point in time under the Reserve Bank's prompt corrective action, 5 more are expected to be included in that number. What is the prognosis? What is the way forward? If I were to ask you about what to your mind is the need of the hour today, what would you say?
Well, again, being away, I have not looked at it in any great detail. I'm being very honest. And this is something that the bank should study and comment on. But I read about what the government wanted to do, that is inject capital. I would think that that is the first step that needs to be done for any bank, if indeed that is the challenge that is being faced. So capital needs to come in. Cleanup needs to be done simultaneously. Other than that, third element is get the right people to run the structure. I'm not saying, as I said, I do not know the people who run the banking system now in the larger context. But if you need to get the skill sets right, then you get the skill sets right. So these are the 3 things that a bank can do.
We've been doing a series on CNBC TV 18, and we've had people like Monte Kaluwalia, Bimal Jalal, and so on and so forth comment on what the prescription or the road ahead could be. And a lot of suggestions have come in that perhaps the ICICI Bank example should be an example that the government should consider to take forward. Maybe privatization at this point in time, there is no political appetite, no political will either for that. To your mind, what could be that bridge between privatization and the fact that we need to move beyond where we currently are?
Shereen, I honestly have not thought about it, but I'll say this. Get the capital in first. Get the banks to be sound, and then I think the government will... but I read about what the government wanted to do, that is inject capital. I would think that that is the first step that needs to be done for any bank, if indeed that is the challenge that is being faced. So capital needs to come in. Cleanup needs to be done simultaneously. Other than that, third element is get the right people to run the structure. I'm not saying, as I said, I do not know the people who run the banking system now in the larger context. But if you need to get the skill sets right, then you get the skill sets right. So these are the 3 things that a bank can do.
We've been doing a series on CNBC TV 18, and we've had people like Monte Kaluwalia, Bimal Jalal, and so on and so forth comment on what the prescription or the road ahead could be. And a lot of suggestions have come in that perhaps the ICICI Bank example should be an example that the government should consider to take forward. Maybe privatization at this point in time, there is no political appetite, no political will either for that. To your mind, what could be that bridge between privatization and the fact that we need to move beyond where we currently are?
Shereen, I honestly have not thought about it, but I'll say this. Get the capital in first. Get the banks to be sound, and then I think the government will be in a much better position to take a call on how it wants to take the next step regarding banking. But at this point in time, cleanup and capital will be the absolute priorities that the banking sector would need. And this is a prescription for any banking sector anywhere which is in the situation that we are in.
Okay, on that note, we'll take a break. When we return, we continue our conversation with KV Kamath, the president of the New Development Bank. Don't go anywhere. We're back with the CNBC TV 18 exclusive in a moment. Welcome back. You're watching the CNBC TV 18 special. I'm Shereen Bhan, and we're in conversation with the president of the New Development Bank, KV Kamath. Mr. Kamath, let me talk to you about one of the other big global concerns, and that is the possibility of a full-blown trade war on account of the tariff imposition ordered by the president of the United States. What's the reaction in China? Because so far, we haven't heard on very categorically whether there is going to be retaliatory action. The threat of retaliatory action, whether it's from the EU or China, has been talked about, but so far we haven't seen any movement.
Yeah, I would think that we need to watch the situation a few more days to understand what's really, what are the next steps on both sides in terms of retaliation or no retaliation or negotiation. My own view is that this whole move has to lead to negotiation, because I do not think anybody would be prepared to go down and start looking at
a full-blown
trade war, which throws everything into chaos. Part of it, if you see, initially when there was this announcement, global markets went into, I would say, nervousness, but then they recovered. I think the expectation now is ultimately it will be bilateral negotiations that will be held between various trade partners to sort out whatever are their current issues.
Production cuts, do you think China would fall for that?
Could be a variety of measures, could be, I'm not saying that tariffs that have been talked of will be removed. Similarly, there could be tariffs on the other side happening. People could agree to tariff cuts where convenient. But clearly, each country will look at its own, I would say, needs and priorities in taking a decision. So we will see a very interesting new equation developing, that's for sure. But I would hesitate to say it will be a full-blown trade war.
What's your own sense on growth in China at this point in time? Of course, there's plenty of interesting developments that have taken place on the political front, but in terms of growth, and specifically in terms of the One Belt Road aspiration that China has, and whether the NDB could play a role in that in any form or fashion.
You see, if you look at China, there was earlier some skepticism, but I think the skeptics have been proven wrong over the last 2 years that I have seen in the country. There is skepticism that growth would come down. But when you look at where growth has leveled off, it's leveled off where the government said it would level off at around 6.5%. And there are certain other indicators which prove that this growth is happening on the ground, as it were. 2 years, a year and a half back, 2 years back, there was talk that the renminbi is going to weaken to over $7. Renminbi today is actually thereafter strengthened to around 6.3 or around at this point in time. So clearly there is strength in the economy which is reflected. And one of the proxies, which is the exchange rate the country has got. So there is real growth happening. So China, I think, is on has found I would say the mantra for growth, and they stick to that. The mantra for growth, as I read it, is continuous investment. Continuous investment, the act of investing is seen as growth providing. And the fruit of investment, when that asset is put to use, then provides the returns on a long run basis. And this strategy is very, I would say, simply and beautifully executed, including in the city of Shanghai. If there are 4 seasons, there will be flowering beds in gardens would be changed 4 times. Now you may laugh at this, but there are plants are repotted with flowering plants. There's a back-end system which is generating this. There's a transportation system, the potting system, army of gardeners are doing. So everything is productive activity. And of course, in this, the return is your joy when you look at the flowers. But so there is, and I use this as an example, but you can do it across the spectrum, and you'll find similar efforts at each and every, I would say, aspect of the economy that they are using to keep growth going. And I think it is a very workable model which other countries could look at. As far as the One Belt, One Road is concerned, NDP does not have any projects which are in that sector, and neither do we see anything in our pipeline the near term. So we are at this point in time not in the Belt and Road initiative.
Right. You're here in India while the Solar Alliance is also meeting. We've got the French Mr. Macron here meeting with Prime Minister Modi as well. One of the sectors that is causing a fair amount of concern, for instance, is the power sector, but that has more to do with gas and thermal. There are concerns, though, on the solar side as well, given the state of the auctions and whether or not the tariffs are going to be viable or not. What's your own assessment?
See, on solar, my view is that today it is no longer a fancy product. It is a product which its time has come. So whether it is 3 cents or 3.5 cents, I would think the price curve is going only one way, and that is down. Because imagine this is 3 cents now, or 3.5 cents in India, with the current level of committed, I would say, projects. You imagine a commitment which is 5x or 10x of what it is. You look at off-grid type of structures. You're looking at costs dropping dramatically. And these sort of structures, not only in India, but also in large markets like China, and in due course could be in Africa. So the whole equation as far as I would say renewables is changing dramatically in favor of renewables. And I think nobody can today afford not to be looking at renewables seriously. I would go so far as to say that there may be, probably the time has come where no new fossil fuel plants will really be justified unless there are extraordinary circumstances which justify these plants. So between solar and wind and water, I think most of your requirements could be met.
So if the bet of the future is on the renewable side, so then, what about the current power sector? I mean, the banks are sending out SOS to the government saying that the power sector could be the new steel sector, and most of the steel assets we know are going through the IBC
again,
process.
If you look at a country like India, before you get adequate solar to meet your future needs and your past needs, that's going to be another 10 to 15 years. I think you have the economic life cycle of the existing coal-based plants, over that period, and those should be able to, repay you your the borrowed funds. The challenge on coal, which a country like India needs to probably look at, is can we retrofit some of these plants to get them to be less, polluting? Could we do that on an emergency basis? Could we increase efficiency? So there are very interesting ways that over the next 15, 20 years, when the residual life of these plants, you need them, because you can't actually mothball them today.
Sure.
Because you need that power. So for that residual life, can you get them to generate more efficiently? I think should be a question that countries like India should ask themselves on their existing generating capacity while adding new capacity using solar.
Let me end then by asking you, sir, what do you see as being the single biggest opportunity from the NDB's perspective in 2018? And I'll end by asking you much more specifically about India. I mean, we've had this conversation about the stress in the banking sector. And the worry now is that perhaps there is a bit of a policy overreaction on account of what we've seen happen with PNB and so on and so forth. Could that lead to a credit freeze, which could then impact growth?
Yeah, I see. And the first question, as far as I'll take the first question, the last question. I'll talk about NDB. About the banking sector, frankly, today, India, I think the market is coming of age very quickly. That is the capital market. So there will be, where there is need and the company's rating is appropriate, it will have choice in terms of either looking at a bank or at the market to fund its needs, through bonds and or equities as need be. But having said that, again, in India, the cash flows are strong. And when that residual demand picks up, which, as we discussed earlier, has to come out of increased consumption, I would think that cash accruals themselves would meet a large part of the needs to invest into industry. So I don't expect cash crunch impacting creation of new capacity.
Okay.
So that is part. As far as NDB is concerned, I think the foundation work is over, and we will now drive the superstructure, and we will drive it at a pace that is appropriate and a pace that meets the expectations that our member countries have set for the NDB. Thank you.
Well, Mr. Kamath, it's always a pleasure. So thank you very much for joining us on CNBC TV 18, and we wish you the very best of luck and hope to see you back soon.
Thank you, Shereen.
With that, it is time for us to wrap up this CNBC TV 18 special from all of us here. Goodbye, and many thanks for watching.